there's a lot of talk in the market about the frequency of Barita's APOs, right?
Yes.
And the frequency at which Barita raises equity.
Yes.
Equity is long-term capital.
Correct.
It has left Barita with a quite a differentiated position in terms of capital strength relative to its peers.
That's correct.
Now, that practice of raising equity, take us back to the teeth of the coronavirus pandemic. March 2020. I think the chairman spoke a bit about this in one of our recent disclosures. The fear index, the so-called fear index, the VIX, was higher then than it was in the global financial crisis, correct?
Yes, it
now,
was.
with all this capital, all this cash, and these depressed markets, what was Barita able to do in that environment?
So what liquidity and capital strength and strength of cash, as we refer to it internally, allows you to do is it's a defensive tool, first and foremost. So we were able to withstand the worst of the market risk, the fear, as you described it, without being too panicked. We certainly were concerned about what was going on around us. It's a medical crisis. Markets are volatile. But that was the defensive element of it. But the offensive element of it was the fact that we were able to position ourselves and clients appropriately during points where there was severe price dislocation. Things were trading way away from where any reasonable measures of fair value would put them. Right? So strength of capital allowed us to, one, be in a very good defensive shock absorbing position, but it also allowed us to take advantage of opportunities that we saw in the market.
So tell me if I'm correct in a sum up, Ramon, or fair. Barita's balance sheet, its analytical capacity, and quite frankly, its courage to act in the teeth of the pandemic brought on financial crisis and acquiring cheap assets there. Can I draw a straight line from that to increased fee income in our asset management unit?
Yeah, I definitely think there is a direct correlation there. The fact is, Raul, that core to our strategy post-acquisition has been successfully blending a combination of human capital and financial capital. I mean, Jason spoke to the large ambitions that we have to impact the lives of the ordinary Jamaican, the ordinary Caribbean citizen, right? And that requires scale. It requires scale, it requires people, it requires partnerships, right? And that is core to why we've been doing what we've been doing. We've been raising capital, we've been acquiring talent, we've been building partnerships to position us to achieve our ultimate objective of positively impacting lives.
Okay. All right, so staying with the core business.
Yes.
So if we move down the income statement and we look at the FX translation gains, right?
Yes.
Line item, FX trading and translation. We see significant growth again. I think that number came out north of $1.7 billion, right? But interestingly as well, whereas that line item represented 11% of operating revenues last year, it's up at 26% in the year-to-date figures. Give us some color as what drove that.
Sure. So again, it speaks to another structural shift, right? That has taken place during the post-acquisition period. Again, the fact is that pre-acquisition by Cornerstone, Barita was fairly passive in terms of managing its foreign currency position, right? Additionally, Barita has had a Cambia operation for years, but the introduction of Cornerstone and the capital raises that have occurred have added significant scale and capacity to that operation. So it's a combination of the two. So let me break it down, right? With respect to the Cambio, to start there first, we have added float, which has allowed us to actually move market share as a Cambio from 6th pre-acquisition to 3rd as at the end of 2020. So the hallmark of that is increased trading volumes, which by extension will result in increased revenues, right? So there is a direct increase from that business line. To complement that, we have become a lot more active in managing our exposure to foreign currency movements in the market. So what that means is that, quite frankly, in the pursuit of preserving shareholder value, in an instance where we detect that the Jamaican currency may, for example, appreciate against its foreign counterparts, we may position our balance sheet appropriately to benefit from a revenue perspective from that appreciation. And the same is true if we anticipate that the trend will reverse. And financial year to date, it's there for all to see. I'm sure those in the productive sector have been paying keen note that there's been a bit of volatility in the Jamaican dollar versus its trading counterparts at different points in time during the year. And we have managed to navigate that, relying, as you pointed out earlier, on that human capital. And so it was definitely supported by having the financial capacity to make those moves.
Okay. Ramon, you get a gold star for acknowledging two-way movement of the currency.
Oh.
Jason, for the benefit of the layman, we'd ask for color. We see we're operating cash in the financial year to date is down 60%, right, to about $753 million. And that's coming from $1.87 billion in the year ago period, right? But net profit is at $3.7 billion. So just add some color and explain how those two facts can be true at the same time.
Thanks for that question, Raul. I'm happy to explain that. No, there's no fundamental issue. The reduction in operating cash is a matter of classification and timing issues. Now, forgive me if I go a little bit detailed in explaining this one. I think it's very important for listeners to understand what's behind the operating cash flows of Barita and the movement period over period. Now, the operating cash in the cash flow statement is principally composed of two parts. It's the adjustment of profits, year-to-date profits, for non-cash items. If you look through the operating cash flow statement of Barita, the observer will realize that profits adjusted for non-cash items for the current 9-month period ended June 2021 was roughly $3 billion. That's roughly a 100% increase over the corresponding period last year, which is a very healthy movement year over year. Therefore, the question is, what led to that position of $3 billion in profits adjusted for non-cash items falling to $750 million in the operating cash flow line for this current 9-month period? And it's because of what happened in the working capital, what's called the working capital line or section of the operating cash flow statement. The fact is that Barita, over the 9-month period, grew its total assets by just over $14 billion. Barita could have chosen to fund all of that growth with interest-bearing liabilities, for example, repurchase agreements. That was not the case. To the extent that assets have grown, in order to acquire assets, that's a cash outflow item. The funding of those assets, so to the extent we have raised funding through repurchase agreements, for example, that's a cash inflow. If Barita had raised all $14+ billion in repurchase agreements, then the operating cash flow line would have been closer to $6 billion, all other things being equal. The fact is, because Barita raised $13.5 billion close to the end of the last fiscal year, just over $5 billion of that sum would have been uninvested at the end of the last financial year. So anybody looking at the cash flow statement will see that at the end of the last financial year, Barita had roughly closing cash and cash equivalents of around $5 billion. So come October 1, Barita would have immediately start deploying that into assets. So that portion of funding, which is not reflected in the working capital area of the cash flow statement, would have contributed to Barita's $14+ billion growth in assets. So it's simply a feature of how Barita has decided to responsibly fund the growth of its assets. And it's a little contrarian, because the fact is, if Barita had used interest-bearing liabilities, which is perfectly fine, then the operating cash flow line would have reflected a much different result. Barita used long-term capital, which was not fully invested and couldn't have been fully invested in a few days to the fiscal year end of Barita. And the result is that that line is temporarily reflecting that depression. At the end of the day, Barita choosing to fund its asset growth, so we have to move away from just the accounting and timing differences I just mentioned and understand the real impact of Barita using permanent capital to complement raising interest-bearing liabilities to fund its growth. And the reality is that ensures that Barita is a stronger entity as it relates to capitalization, liquidity, and solvency. That is in the best interest of all stakeholders. And I'm talking, first of all, the customer, Barita's customers. I'm talking about other industry participants who interact with Barita. I'm talking about the overall market, the regulator, and of course the shareholder. And all stakeholders benefit from Barita's decision to fund a significant component of the growth of its business through permanent capital. And I think that fundamental fact should not be lost by any focus on what based on what I've explained, redounds to just accounting and timing differences.
Okay. So a couple of key points. Barita earns money from acquiring assets, not from allowing the cash to sit in the vault, correct?
That's correct.
That's a fair point. And in terms of the difference in operating cash, the decision to keep capital ratios at a level that ensure that Barita is rock solid would have been partly the part of the explanation as to why the change in operating cash took place, right?
Right. It's just a matter of how the accounting rules indicate source of cash should be classified and how quickly Barita was able to deploy the capital raise very close to its last fiscal year end. That's it.
Okay. Instead of funding most of the liabilities, we use some equity.
That's it. And some of the equity at the last fiscal year end was not fully deployed, and we deployed it in this new fiscal year, which funded roughly 5 billion of the 14+ billion growth in assets on the balance sheet of Barita.
Sounds good to me.